Greetings, market rebels. Welcome to this week's macro measure. It is Friday, September 26, 2025. I'm also welcoming you to the sector situation on the same date. It is, let's see, a little bit after 3:30 p.m. here on the East Coast. I'm Wayne. Here's the Trusty Market Rebellion disclaimer, Trusty Intellectual Property Rights Notice. Going to flash last week's slide, and let's see if there's anything on there that I remember. I looked it over, of course, but um, I think a lot of that we just are going to almost like recover, um, and that's it. So yeah, I think we just go into the main slide just kind of for the record because we typically do that, and then here, well, I say that I thought I had this week's. Oh, there it is. Yeah, there it. That is this week's. So last week was mid-channel madness. This week we're going with Powell down, Besant up, because that's pretty much in terms of the news and the way that the market price action developed this week. It's pretty much what I think sent things in one direction and then reversed them back in the other. You could say, well, the timing was perfect for both because we looked due for a reversal or a little pullback that Powell provided, and we looked like we could use a bounce before we crack support. So I don't know, maybe this is all baked in. I have no idea, but I can tell you that the mid channel and the support line of the channel we've been working with for quite some time mattered yet again. So we'll go into that. So still very interesting times. Go to 2x on speed. The channel, as I noted, will not let up. We'll talk about that. Let's see. Yep, still vol positioning reminder, way down. Again, they had a Friday, sort of like a Friday sell-off in the VIX. Put that right here. VIX Friday wrecked. They just wrecked it today. It was popping. But Besant came out, of course, said what he said. Stocks were predisposed probably to do some rallying, cause a little bit of trouble for bears as usual in an uptrend. And you get the strongest season up next. We're literally, I guess, just a few sessions away from booking Q3. We will then just be a little bit away, maybe a few weeks to 3 weeks away from earnings season starting. That will be in the fourth quarter, and as many of you know, the fourth quarter tends to be the strongest season. So I think it's fourth quarter is best. I want to say the second quarter, I think, could be, and the second quarter and first quarter are, I think, close, but I think the second quarter edges it out. And of course, the quarter we just are about to wrap up on tends to be the worst quarter. So far, right, when you registered new all-time highs in the major index ETFs this week, before the pullback. Not such a bad quarter, right, so far. So with 2 days to go. Anyway, we still are in the rough seasonality phase. Potentially, this is when we usually see things happen. But the Bears are on the clock because that's winding down, and they had a shot. But unless there's a late sell-off today while we're discussing things, we probably have to, again, assuming we're coming in with a relatively news neutral Monday, you probably have to still stick with the trend, the way we've just been resolving ourselves, and that's why a lot of these things have not changed. Many times they're not this consistent week after week, but this has been a very consistent market now, for week after week, for month after month, and we're still in the same channel. So it's really tough to change it that much. There just isn't that much new stuff emerging that is all that altogether that interesting yet. So, but anyway, the rough stuff did happen. The Bears are on the clock. The rough stuff did happen, but it was saved. The Besant comments really got things turned around. They turned them around a little bit yesterday, and then we spent today kind of holding them in a turnaround mode and pushing things up. There's still plenty of risk below the surface. But the A, I, and C and N, fear and greed, are nothing special right now. They're kind of middling, middle of the road stuff. And there still remains plenty of room on the charts. So I don't know how that ampersand got in there, but it did. But there's plenty of room on the charts. And so between holding support, assuming news neutrality, I think something could break at any time, but if you just ignore that and you can't let that stop you from trading the trend, you just got to keep going with it as we tried to. For the most part, most of the ideas that have worked out the best over the last 4 or 5 months have been bullish ideas. We have had predominantly bullish ideas. I did manage to sneak some bears in today and maybe a few this week, which is good just to have a couple in case things do develop that way. But it's not been easy to come by. So they were just sort of fortuitous that there's a little bit possibly there in IWM and SPY. Anyway, we talked about stupid moves, something like Oracle, that kind of thing, and other things that have been happening that got extreme. It does happen in extreme times. Some of the hot air was let out of some of those names. And so I would call that healthy, where some of those things finally gave some back and stopped being so utterly ridiculous. So without that taking the whole market down with it, that's probably not a bad thing, really, that we got some of that out of it. Again, song remains the same. I'm still sticking with this. We've been here for months that the trend is up, right? Everything stays intact. Breadth has not been that awful, or the sectors have not been that awful, or there haven't been other signs where, hey, you need to start really positioning yourself on the short side, or you need to get out of all your longs. It's been the same song over and over again. And so still, I think you need the downside the downside needs news to develop that's significant. Something, or there has to be a break somewhere in the markets where something stops functioning, which could happen, by the way. That's part of some of the things percolating beneath the surface that I won't even go into, but I think it's there in some cases that could cause problems. So uh, it's not worth going into that until you start getting maybe more news on it and you get closer to it. But there are some things. And of course, you could have some socio-political stuff with the Comey type thing. If that tends to spread and you see more names, that could lead to, I think, bigger problems on the societal front. And we'll have to see on that. But that's the kind of thing that I could see happening. You already have some things developing on their own without that. So, and there's a lot of pretty inflammatory rhetoric out there. So you could just see things spill over, and that could cause trouble in the short run. The IWM, the XAU, we were looking at those as ones to keep an eye on, and we'll talk about that. We're still kind of putting a reminder in about precious metals up, stocks up, but things flipped around where yields moved up and the dollar moved up too. Now that's typically not great, right, for stocks but they've shaken it off so far. This week, we'll look at breadth and sectors, of course, but they're not all that great. They did kind of take a hit. Talked about that a little bit in cocktail, but because of the turnaround that started yesterday and today's action thus far, right, with only about 20 minutes to go, it's saved for now. So I think you have to keep playing the trend. If you, again, news neutral assumption, you just keep playing this trend, and I think we can see why. So I didn't change much on this. This is still just some of the thoughts that I have there, but I think the end of the without news to take this market down. Um, I think that the melt up into year end is still potentially there. This was a bearish week that resolved in the end for the Bulls. That's just calling it like I see it. I mean, the Bulls stepped in where they had to, courtesy of Besant and on timing, and they lifted things up. If it holds until 4 p.m., I would consider that a win. I still think we're at an advanced rally stage, and we are still sub mid channel, but we bounced. So, well, for now, right, the benefit of the doubt goes to the trend. In this case, the Bulls are in control of the trend, so we stick with it. Can't say there's not very solid potential in terms of upside. I think there's still a great deal of potential on the charts. So I might have other opinions on what this, that, or the other thing, what makes sense. How is this how is this not crazy? But just like anyone else, but I don't ever go off of those. I just go off of what the charts continue to tell us as far as trading and investing goes, because you may have some things in the back of your mind, but I could see where people could think the whole year has been um, a little exuberant, right? Since we bounced, where people think this is just crazy. And I think that's why you do see under positioning by so many players, uh, honestly. So, you can think that, you can believe it, but if you're going to let it stop you from trading or investing when there's opportunities because the trend is higher, I think, that's clearly a mistake because it might not have been the easiest year in terms of what we saw with big down and then big relentless up. But we've had some really great trading opportunities, I think, this year. And that's mainly what we're doing in most of our services is looking for opportunities. Mainly it's been upsiders, for the past 4 or 5 months. Um, so anyway, I'm just going to leave this one there as well. Just thoughts, and then closing thoughts are the same, really, too, on terms of Trump being Trump, and for better or for worse, if you like him, if you don't, he's just a newsmaker, and that can cut both ways. And I tried to make that case a long time ago when we had the sell-off that it's not about, I like Trump, I don't like Trump, that, I think this about Trump, that about Trump, whatever. It's just that Trump is not, he's bold in terms of newsmaking. He's not steady as she goes, and he's disruptive, in my opinion, that way. And I've seen people complain about it, traders, and I've seen people running businesses complain because of the tariff news. And they're like, wow, this is so hard to run a business. So you might like that policy in the long run. You might hate it, whatever. But I'm just saying that it's disruptive and it might catch the market off guard. That's really the only comment I make. And people just read into politics into that when I literally felt like I went out of my way, and I'm still going out of my way not to really turn it into something political, just discussing it objectively that the guy is a newsmaker. And so, or at least his administration can be at times. And so let's not forget that. That's why I think you should, obviously, another great reason to stay disciplined. But you've got the end of Q3, which is imminent. We talked about that. Don't forget, the EPS season hype and drumbeat will start soon in so-called financial media. And the bars will be lowered. 80% of companies will beat, roughly, if we get a replay of last quarter. So, it's all set up to keep working, 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 and that could frustrate people. But that's probably right, the sort of basic script to expect. Now, do we get that? Of course, that's always the big question. Do you really get what's consensus and what you would expect and what happens more times than not? We just don't know because you just don't know what's going to develop in the markets between now and then. It's probably only a few weeks away where earnings season starts, and then it really picks up into the second half of October into November, and so on and so forth. But remember, the fourth quarter is good and the best one. And if we end up with problems from some of these players that are just underinvested, then you could, again, that's where I think that melt up possibility comes from. Anyway, I would just note that I again rolled this week, right? I was in a lot of things. There were a lot of speculative names that were making good moves. And whenever I had a moment, which I don't have many, but whenever I had a moment, if I wasn't doing it automatically, I was making adjustments when I could quickly just to roll. And I was, at the money rolling and slightly over rolling in some cases, um, in a lot of little things that I've been in. Not really big names, but some of them were like AI type names earlier in the week, and um, there were some other things like and some EOA names that were just all across the board with different types of companies. But yeah, but anyway, I'm sticking with that plan because uh, I just want to see us get away from the danger zone on the charts. So on that, I'm going to stop our share, and then I'll come back to this if I have to. But what I'd rather do is just really talk about this on the charts, and I'll get this to come up hopefully over here and share screen number 3, and that should put us right here. So here's one stock that uh, is indicative of what I'm saying in terms of like the stupid moves where it got really silly, right? You might say, well, it was justified, but you can see finally this is giving it back. Everyone's got their take on everything, and that's fine. I'm just saying you don't normally see this kind of this kind of a move on news, and probably overdone since it's giving this much back so quickly. But that's what I mean. Things like that are kind of giving it back. Now, what I wanted to cover was couple of problem areas. IWM, we can go back here. I added a few lines to kind of frame the action for us. And you can see here on a weekly chart that we did exceed, right, the former high. And this high was right near a similar high further back in time. And so all I can tell you is you might say, well, that kind of has the look. Maybe you don't see it as well on a weekly, but maybe if I give us more daily info to work with, you can almost see sort of like an inverted compound head and shoulders. And so you have to be careful with these because they're awesome when they fire, but when they fake fire and reverse, they can be ugly. And it can get ugly quick and stay very ugly for quite a while. So I've seen this happen many times. And with that being the case, it's probably, I'm going to say it might not have been a coincidence that, Besant spoke up. I've seen government players do this time and time again, and they tend to really have tremendous timing when it comes to saying things that the stock market uh, denizens can use to their advantage to move things back up. And so here you were on a support line, and yesterday looking like you could crack the 20 in blue, looking like you could open up some more downside for the retracement, things like that of this move that we've seen. That, of course, did not happen because they were able to reverse it. So that's one area that we talked about, but that was a fake kind of like fake breakout and reversal. And this is why I always try to remind everyone, because I always assume there's some newer folks that when you're trading this, this is exactly why we say if it's not working, right? I don't think we had anything in this, by the way, but we will say if it's not working right and you can't hold the trigger level, if it can't break out and hold above, let's say, former resistance, we tend to either hedge or leave the trade and set alerts and look maybe to get at it again because uh, you don't really want to play that game because in other words, broken false breakouts and breakdowns are good trading opportunities on a contrarian basis, right? If you look at it as a contrarian and you see a breakout attempt fail, where they try to push things up and it fails, you often get a swift move in the opposite direction. So that's exactly why you don't want to stay in something that looks like it's going to work and didn't and doesn't, because then you're better off taking a small loss and setting yourself up to get back in rather than overstaying your welcome. That's something that a lot of people that are new may not know. So I try to mention that because it can be very painful. I had a situation where this week where I was in one stock and for some reason I could not get my adjustments done, and got busy and couldn't get back to it. And I just don't know why I couldn't get a fill. I should have been able to get a fill, didn't get a fill, and then they had moved this thing $5 against me. It was only a $130 stock. So a $5 move was pretty decent against me by the time I was able to get back to it. And we're not talking about hours later. I mean, it might have been like 20 something minutes later. It wasn't even that long, but that we all know that's how the market can move at times. Anyway, here's the XTN. I'm jumping to this because this not joining the party has been part of our problem, right? This is one of the things we're looking to see along with IWM in terms of, is this really the dawn of a sustained bull? Are we about to go into the next phase, right, of another like really aggressive leg higher in a bull market that could last for another 2 or 3 years? Typically, that may be the case, I think, since World War II or whatever. So you might say, well, isn't it already good? Yeah, it's pretty good, but it's not as nearly as long as it could be. And that's the hope because, as I often say, I think it's a lot easier to not obviously invest, but not only invest, but trade in a bull market rather than a bear market, in my opinion, as much as I'm someone who doesn't mind the bear side at all. It's just that I think it's easier on the other flip side, because they can really frustrate you. You really have to be really patient in a bear to really get your full payoff because they really can monkey. I feel like they monkey around with you as a bear a lot more than they do as a bull. Anyway, XTN. So yeah, this did not have a good week, right? And so speaking of which, let's pull the sectors over because this is part of the problem of the week, but we got to save here, with the way this market looks like it's going to close. We're only 7 minutes away. And so, right, some of the former leaders, it's understandable that the risk on sectors like XLK and XLC took a little bit of a breather. No problem. It was overdue. So that's not a big deal to me, really. But XLE breaking out potentially, that could be a big deal. And is it good? I mean, I'm looking at it a couple of weeks ago. Yes, that's good. But is it good, right? If things aren't wonderful and now energy is going to join the party of higher prices for Jane and John Q. And a lot of people that are not in the top tiers of the income and wealth strata, right? The higher, let's say, quintile or quartile, those people are not doing well. They haven't been doing well for a very long time, courtesy of not very good people, to say the least, that goes back a very long time. But there's so many people to blame, it's not even worth trying for that. But yeah, they were sold out a long time ago, and they've been struggling for a long time. So that only makes things harder on them potentially, but at the same time, it could be a good sign. Now, I clearly don't have the time to get into all the specifics of the energy market myself the way you would if you were trading the energy market. You should really know a lot more about it. So I really can't speak with any authority and say, yeah, this is exactly what's driving this. It's not even related to this, that, or the other thing. It's just general idea, right? General questions. I just don't have time, obviously, to delve into that with all the paper we see in UOA. XLF, this is encouraging that it's held on and recovered. So we're not far from the highest highs. You want to see that, and you want to see XTN. So two of the three are, you've got one that's rallying, one that's hanging in there, and one that's tailing off. Those are the three that I really want to see do well, along with IWM, and then you're really on to something. And you could still be, but it could be early. Now, XLU, right? This is also powering back up. So again, is this risk off or risk on? The old XLU for most of my professional life was risk off. It was seen if that was being bid, right? That was really people heading into a defensive posture. But these days, with what's happening with technology and energy demands and so on and so forth, it may not be. So that's having a good week. You had a really kind of a frustrating setup here in XLB where it just tailed off. It was kind of, working its way, holding on near those highs, just couldn't get it done. We've backed off. XLI backed off a little bit, but just hasn't rallied. It's not again, this is not the end of the world. So the Dow sectors, nothing special, right? This is interesting where XLP staples have backed up, but XLY has not, right? All that much. By the time it was, but by the time you tack on today's gains, you're practically back up to Monday, which back up to Monday's closing level, which wasn't that bad, right? So really, it's not that bad. Because of today's save, you're really not having a bad week in XLY. XTN, we talked about these defensive sectors. XLV is getting hammered. XLRE, this one's going up, right? So it's almost split there. But this is not really, I wouldn't call this a pretty picture in the sectors right now. It's not horrible, but in some ways it's a tiny bit worse, maybe for consumers, in my judgment, than it has been. So I'm not going to really say this is why this bull market's over, or here we're about to have the down leg based on all this, but it is not really stellar. We've seen it look better, I think, than it does right now. But remember, this could all start squaring itself up and looking better literally within a few sessions of next week. So I think it's premature to start really droning on about how definitive this is at this point. I don't think it is. Another thing we should look at is market breadth. And just for the record, I'll throw the spiders up there against that. I did show this on Cocktail. And so there were some things, right, that were not looking that wonderful. So here's the advanced decline cumulative average, okay? That's basically effectively like a running total of how things are shaping up over time. And so you could see that we backed off, right? But things were looking pretty bad. If you say, well, you may have even broken trend on that, the intermediate term trend of the last few months, can't argue with you. So that is a little concerning. But remember, this isn't perfect, right? You do get breaks like that. Of course, price is more important than this. And if you go back and look at this, and that's what I'm going to do, when you get to, and it looks like I'll need this to get us a better view. But when you do this type of thing, you get to see where when you make some low points in reverse, it's often right at support that we get those, right? So here's a clear low point from which we reverse from, and you're right on the line. If you do another one in here, probably this day in here, I guess it preceded it slightly. This one in here looks like the low point pretty much to the day. What about this one here? This looks like it's pretty much very close where you kind of get those pullbacks. You get another one here, and they're saving it, right? Just like there's so that's improving. You can't say the rally's completely hollow. It's just this name or that name because market breadth based on advanced decline cumulative average, that is moving back up a little bit, right? So this is good for now. Now, this is the problem that people have. I say it every time, but let's not forget where we are. We are below the mid channel still. We're not above the mid channel, showing us that there's really risk on right now. We're below it. And we're near the lower part of the channel, meaning we're near the key support. So could things change very quickly where it looks good now as we're talking about it as we close out the week here on Friday, but by Monday we're back in the soup? Of course it could, right? And this is kind of what drives people crazy about technical analysts and forecasters and whatever you want to call people gurus or whatever. But anyone that's been around the markets will tell you that one of the critical things in being a successful short-term trader is being able to adapt to changing conditions, being dynamic along with the market. You have to be dynamic because the market's dynamic. So this is what could change quickly, where you'd be right down below Friday's low, threatening Thursday's open and close, and maybe, right, working your way back down with one bad day, just one, not even a horrendous day, just one bad session. So just as of now, at this snapshot, things are looking good, much like they have at other lows where along this channel, along support where they have bounced it. So I would give this the benefit of the doubt as of right now, but I have no idea what we're walking into on Monday. The other thing is, let's look at this breadth as well, right? You could see that there's been deterioration during the last, let's say, roughly a month. It'll be a month, right, by Wednesday or Thursday of next week. So you could see that the number of stocks in the SPX are not above. There's not so many above their respective moving averages as there has been at other times where the action was stronger, right? So where you had almost three-quarters of your stocks, if not more, above there. Right now, you only have let's see, 49, 55 below, 50, sorry, 55 above the 50 in gold. You've got 62 above the 100, and you've got 63 above the 200 in purple. So you can see this is not a horrible reading or something like that, but it's certainly not showing you the strength that it once did. So this is what I'm saying, where there has been some deterioration the last few weeks, let's say, across the board with different things. Right, here's cumulative volume, right? That was really in trouble breaking until really today's session. And I talked about the McClellan oscillator and McClellan summation, and this is essentially, right, the McClellan summation is essentially a slow, let's say less responsive, kind of by design, smoothed out situation with what's happening with the McClellan oscillator. And right now, the best thing we could say is, like, you could see the McClellan oscillator was not loving the action for the past few weeks, but you could see here, right, that when you do get these, let's go back and look at it. Let's see if I can get the price action to kind of overlay that with some of these points, and you could see that on this one, that marks a low right there on the McClellan, and the market marks a low. Right here, it's pretty much the same session right there that you get that. Here, let's see where we were on there. That's, again, you're kind of preceding it. It's kind of a flattish reading, levels off and upticks when you start turning around. Let's see here. We'll do one more on this real lowest low here. And you could probably say, what day was that on? And so, yeah, so your worst McClellan reading was the day after the lowest low in SPY. And then from that point it lifted. So when you get there, right, and you get this low, this could be a good sign, but you can see that there's definitely been deterioration in terms of that. So you can't ignore that under the surface, things are not really as great as the market prices would indicate, right? The market, the actual SPY price level. So just having said that, let's keep that in mind. But yeah, you find support right near the lower part of the channel. Remember, this is why it's tough to, when you trade a breakdown, especially against the trend, right? It looks like they're going to break it. It looks, some of these wicks, some of these breakdowns beneath the gaps below, and they reverse, right? You've got to always be on guard for that. If you're new, just keep that in mind, that just because it's breaking there, you can take the breakdown trade if you think it's going to really break down. But you also probably have to, when it doesn't, that day is the best time. By the end of that day is usually the best time to say it didn't work and not hold on. Unless you think there's news coming, I would say that's probably your best bet. So let's go over to a little bit better of a chart in terms of showing not all that, but showing where we are. And that is our usual chart. And let me just kind of pick this up a little bit. So this is why I'm saying that I wish it were actually, I need to use this chart. I hate to say that, but this is why I'm saying there's a lot of potential, right? Because if we start going up at the rate that the chart, I'm sorry, at the rate the channel itself has been going up, it would sort of look like maybe like a 45-degree angle. And you can see, right, that if I trace things out, it really has the potential to get to the upside of this channel, maybe just under 700. That would be a nice gain from here for the entire, the entire index, or in this case, the ETF. But right, that would be very nice. So that's a nice little, let's say, intermediate term target, potentially just a round number, that you start getting up into the 690s near 700. So there's a lot of potential there. I mean, what does that come out to? A little bit less than 7%. So 6%, remember the fourth quarter, I think, is on average is a good quarter for about 3.5 or 4%, somewhere in that range. So that would be quite a good fourth quarter if you got 6% plus from it, right? It would be 50% roughly, maybe a little more better than usual. But yeah, so you got to get through the highest high, then you got to worry about the mid channel, and that line we will just continue to extend up. But we should also cover that basically, right, Thursday's low and the 20-day, that's probably about where it gets dicey. I've got a spider's bear idea in there just in case. I was fortunate to get some paper that came in. Want that in place because want folks to have something to go to. Bears have been very hard to come by. We've been, I won't say exclusively, but predominantly bullish, overwhelmingly bullish, month after month with the UOA ideas, week after week. That's just been the flow, and it's been the nature of the market, And so this week I held off from a lot of bullish things, fortunately, because of the work that we do, that we discuss here in the webinar. I'm sorry, in this recording, in the video, because we failed again at mid-channel. So when I saw us pulling back, I'm like, man, they're keeping this thing from above mid-channel. And a lot of papers started coming in, and I kept setting my alerts and waiting for a turnaround somewhere, but it just kept continuing to get worse and worse. So I really throttled back on bullish ideas this week because I didn't want anyone to really get enticed in things with the market, too many things, I should say, with the market going against them. A lot of folks that are new tend to discount how important the market's let's say tide is, I think. So I try to be on guard for that. But I do make sure, if something that's really compelling gets in there, for as best I can for our folks that are more experienced. But anyway, you can see that you'll be in trouble below the 20. That kind of opens things up to other flat lines, right? Other retracement levels. The 50 would be your big one there at 644. So if you do kind of get that quick failure where we come in and there's more news and there's problems out there, whatever they're developing. Yeah, I think 644-ish would be, well, whatever the 50 tends to be, is if and when that happens and we get there, might be, somewhere higher than that. But you've got to get through, obviously, you've got to get through this week's this week's high before you start thinking about anything else. And then from there, we can extend it. If anyone needs help on those levels, just go ahead and bring those up, in the forum if you're trading this ETF. I don't really want to spend time on that because I really want to just spend more on market discussion. But let's see. So let's do the Qs, and you'll see it's very similar. We got, there's the line. I tried to get the best fit for us with my support line, and that held out here. There's a couple, dips below there that are not, but tends to be a little bit more volatile, I think, than the spiders. The good news here is that the 20-day would be a nice spot if the Qs did fall. That would give you probably some cushion, unless the news is really bad. That would probably give you some cushion, and it might not be so easy to crack, but I would do the same thing there on the downside. I think you're clearly looking at the high here as your target, challenging that on the upside for now. And then I would extrapolate beyond that up towards the next level is going to put you near 605, which will put you near the middle part of the channel. So if that's the case, then that's where you go to. So you're going to go 603, then 605, 606, somewhere in that range on the upside. But your 20-day and 50-day are probably pretty good. You could overlay the fibs, there along with it if you want to. I would do that if I were you. Former highs like this one might matter, but that's probably pretty close to the 20-day, quite honestly, right now. So that's why I'm kind of like lumping that in. But very similar, right? Very similar story. There's really nothing I can say about it that is anything like extraordinarily bad. Are we a little bit on some bigger picture charts? Are we somewhat overbought? Yes, but in the daily chart, we're not even close to overbought. So there's no real overboughtness there to worry about. I think you have to worry more about a possible low or high developing and reversing from there than you have to worry about overboughtness at this moment in the Qs. Because it's very similar, so I don't really want to belabor that. As we saw, it wasn't a great week for the diamonds. You could see that with the diamonds-esque sectors, the XLB and XLI. You put this big pop into here. Interestingly enough, it looks like it was a fib extension of 261.8. That got you real close to that 467 number. Greg McDermott, our friend and colleague here, would be happy about that because he likes those round numbers, and he's probably right too. Anyway, so that is similar, right, to what we saw in the other two. I think, again, you can see the 20 dovetails right with our support line. So I'm going with basically the 20. Really, to get the new territory broken, you need to break Thursday's low, which we keep saying as well. So a lot of this stuff is just trading, right? Trading the same. And then you've got the 50. Of course, I'm going to say the same thing I do. You've got your fib retracement levels, maybe like a former high you could sprinkle in there, or former highs. I do actually think that level right there below it is about 449ish. That's probably a good level. Below the 50-day there at 451. It's just a little below there if you think so. That could be maybe some stout support, let's say zone or region. But beyond there, it starts to, depending on the kind of news that's driving it, you've got a big gap between it and the 100, the rising 100 there in white. So for me, I always try to take note of that because I've seen that where a lot of people are SMA oriented, and it seems to play out, I think, more than I would kind of guess that it should. So again, like I think that's a little bit of the self-fulfilling prophecy of technical analysis. But when you see that big spread between them, that's usually a good sign in terms of potential. So there was what came in. Trying to think of what came in at the end of the day. I think it might have been Zscaler. So yeah, we had some paper in Zscaler. Now, if you look what happened here, we use Zscaler in one of our momentum services, and we put the ideas out after the close on Monday. And the idea in that particular service is that we're trying to find stocks that have potential to move with, we feel, very good deals in the options given the movement potential. So and hopefully most of them are bi-directional, or we like to pick a couple that we're bullish on and a couple that we're bearish on, because then the market's tied, hopefully, impacts at least a few of them and drives them pretty significantly so folks can get good opportunities in terms of travel dollars for the week and how far these things can move. Well, you could see, right, just as the market struggled, you come in there on Tuesday, you're having a rough time. Zscaler really dropped from Monday's close near 251 and change all the way down to 279. That's a pretty good drop, but you could see right by week's end, it actually took out last week's high and many, many weeks and months highs before that. So it's just a dramatic reversal. There was a small call buyer. This might be one, and if we come into a bullish market, this thing's unchanged-ish or whatnot. Keep your eye on this one because it's back above all the SMAs. They just probably flushed a bunch of people out. They found support at this ganglion of SMAs. They bounced it very strongly, as you could see on that. And right now, there's just not a lot of resistance in the way. You could see that it's really close to getting into what I would call clearance. Of course, there's going to be some what we call flat line or horizontal resistance here and there, so on and so forth. But this one looks very interesting. And that's kind of what I'm getting at in the diamonds and other things where you really want to see that, where when it takes out a spot that it can have a lot of movement potential. It's not as clear here. I'm just referring to it mainly in the SMA spread. The SMAs are bunched up. Then it has a lot to fight through, kind of all almost at the same time. And so it's not so easy to do because there's so many SMA players out there. But sometimes, right, when they're spread out, it's a lot easier just to continue to drop and drop and drop. I don't remember. I just don't remember all the symbols by the end of the week that I've looked at. It's hard for me to recall like which ones are great examples of showing this, that, or the other thing. But that's you could see kind of what happened here. Interesting. I got lucky here. Oracle, they stopped it on the 10-day in white on Wednesday. They stopped it right near the 15-day in red on Thursday, and they bounced it just above the 20-day on Friday. And that's what I'm getting at. Like there's a respect for these things to a degree. And they, even though you can say, well, it went below there, yes, it did. But by the end of the day, they try to hold these things and kind of get them, use them. It would be a way of putting it. So just for whatever that's worth. Um, but anyway, we talked about IWM earlier. Clearly, right, you got to get back up to this high before you're really starting to get excited again. But bouncing off of this the way things have would be quite good. That would be quite good, and it would be like, okay, it got overbought, right? The RSI was starting to get up there a little bit, maybe got a little extended on that particular day, and they take some of the hot air out of it, and maybe right that opens it up to go a little bit further. So I still think there's a ton of potential there. I still think there's probably, let me think about it. I'm going to say I think there's 30+% potential in that if we do really extend the bull, this bull market goes for real. So I still think it's really worth keeping your eye on. I thought, by the way, like I thought crypto, I had a friend of mine ask me what I thought about crypto over the weekend. And I said, boy, I think crypto charts are starting to look good. They're looking primed, right? Where they were really all they needed was like a little bit of action here to start moving up, taking out this high, and this could go. But you could see, right? This is why you've got to wait sometimes for the action to develop. Where we had some good paper, probably folks made money on some crypto names, but as a lot of when they reverse, they can reverse hard. And we had some of those larger mega cap names we talked about last week start making good moves, but things can reverse and they can reverse hard, when things go risk off or there's problems. So again, position management and discipline are just absolutely critical in trading. Especially if you're short term, you can't really afford to screw around too much. But yeah, this to me was looking good. Despite rough close there last week, it was still really within striking distance of the recent high. All it needed to do was fix that. It would be above all the SMAs, but you could see where that really didn't develop, right? That really reversed, right? So sometimes you don't even start to go. Like Riot tried, it was looking interesting at one point. Mara, they were trying, but they just could not get it done. they could not get it done. So there might have been some little money makers in there, but things just, when that space reverses, it reverses. Kind of a false breakout attempt, if you will, there in Clean Spark. We had another one too that was, I don't even know if this triggered, but you could see the same thing in related. I believe this is related. So we had paper there. It looked like it was potential. Boy, yeah, they reversed that stuff. There was really no opportunity. So there's that. Let's take a look at the dollar, just kind of to show what I'm talking about. So the dollar coming off the lows. That's, interesting. And as I say, normally um, not ideal for stocks that dollar rising, but it may not matter, especially right away. And it's really not like we can say there's a confirmed trend change at this point. Here's your yields, right? And they're kind of creeping back up against what the market, I guess, would prefer to see, right? So there's that as well. And then the VIX we talked about a little bit, and you can see where the VIX really, even yesterday, it was making a new high for the week. But that's what I mean in terms of the VIX getting a VIX Friday wrecked, right? Because they just wrecked it here into the weekend. So a lot of the VIX play, you'll see that a lot where the VIX will just get pummeled on Friday if that sell-off does not develop. A lot of people probably thought there was a sell-off coming. I added to my VIX position. I don't regret that at all, by the way. I didn't add it. I added it before it started lifting too much. So I was, fortunate. So I'm not even trading this for the short run anyway. I've got it for a little bit longer. So I'm not really worried about that. And in fact, if it goes down towards 14 or even better, lower, I'm planning on getting more VIX positions on, as a matter of fact. XAU. So this one has been relentless. We've had some more paper come in. There was more silver related paper. There was some GLD paper. As you can see, it just continues to maintain the trend. The biggest problem here is that there's some things out there about deliverability problems and how that could cause problems within the financial system in terms of I think SLV, more so than gold. But these things are just the problem right now is these things are getting overbought across the board. And that makes it harder. You could say, well, it won't matter because the story's so strong. You might be right. I just mean the way that I typically handle things, right? You start getting into the 80s on a week, say like a weekly RSI type reading with that kind of a thing. I I'm not comfortable, right? Where I'm kind of, because you don't normally get that high. Like what is it? 81 on a weekly. I just changed it to a weekly chart. So yeah, you're getting extended. And could it keep going? Sure. This is the kind of thing that actually could keep going, but it just kind of throws off my bearings because you start getting almost like a vertical nature to it, and you get this overboughtness to it. And to me, that just screams at me roll, 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 right? So I'm not really sticking with, I've got some things in here. I am not sticking with, 90 delta calls at this point. I'm just not going to do it. Not because I think the whole story's doomed. I think it might be the opposite. I just feel like there's going to be some sort of a pullback that comes, and I'd rather give less back on it than more back on it. And that's why I'm willing, if it does go bonkers, I still want to be in. So I'm going to be in that with a less than 50 delta if I roll in something. But I'm not going to stay in my 90 something delta calls and just let it go, 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 especially if they're in the short run. I'd rather give less back, right? If it does happen. This happened to me in this stock this week. I was in this one. I got closed everything out this afternoon or late morning. I can't even remember. But this one started on some of my charts. This one started getting a little bit overdone on some of the intradays. And so I just started to roll on it, because it had made such a move. I just said, I'm not going to let them uh, let them take away, my hard work for this week and this name. And so I started out with in the monies when I got into it earlier in the week. And then I just started when I did my first roll, I rolled to slightly in the monies on my second roll. I did at the monies, and on my third roll, I went to out of the monies. And so you could say, well, look, if you stayed in the whole time, you would have done better. That is true, but the way the market was working, despite energy itself doing well, I've seen if the market breaks down many times, if the market breaks down and it's really becomes a risk off, they eventually come around to sell nearly everything. And so I didn't want to get caught up in that. And I don't have the time to really sit there and watch things closely and contemplate them the way I'd like to, the way that I used to be able to do all the time. That's what I did all day. So in this case, I just thought, look, I'm still going to do well, just not going to crush it, but I'm going to give far less back, right? If they do sort of rug pull energy. And they have rug pulled the XLE, just by the way, many times. It just hasn't been a great trader. Look at all these sort of oscillations, ups and downs where it's looking good and they pull it back. It has a run, they pull it back. So I wasn't predicting that. I'm just saying, knowing the nature of it lately, knowing that the market was struggling for a lot of the week, and that was my position was counter to the market. I just played it that way, played it a little closer to the vest. So I just wanted to share that because I tend to be that's something I try to help out with folks because it's helped me. I feel like it's helped me a lot to sort of use these things to things that I learned from the market to handle things the right way. So um, on that note, I'm trying to think if there's anything else. But yeah, so I think as long as let's just go back and end on the SPY. I think as long as you are focused on as long as you're focused on these charts and this channel and really the 20-day and that Thursday low, you're probably going to be okay. I would start to say if we just remember, right, this in a normal course of time type thing, in normal market mode, we should now go into a rally phase that should sustain itself for several days or longer. And if you don't do that and you start rolling over on Monday or Tuesday and you're right back towards the support line or worse towards the 20, that's telling you there's a little something different than what we've gotten out of this channel since the bottom was put in for the year, right? So just keep that in mind. Like something maybe is changing here, and that's what you got to keep in mind and think about. So I don't want to scare anybody, but I think you just have to be prepared for that. And you don't have to bail out on everything. You can put on temporary bear positions. You can neutralize some of your risk with spreads. I like to do diagonal spreads and then roll down my out of the money calls to an at the money. And then from there, I like to roll towards into a calendar because then you get max protection. But I do it on a ratio so that I don't get too short. And that way, if the market holds and springs back, I'm not giving too much money back before I take off my short call in the near term and essentially unhead. But I just wanted to share that. So I hope some of this stuff helps you out this upcoming week. I do hope that if it doesn't, it helps you in some week in the future. And I also want to wish everyone a great and let's say happy and healthy and safe, wonderful fall weekend wherever you are. If you're in the U.S. because we are officially in the fall and it tends to be a very nice season in a lot of parts of the country. So on that note, I'm going to wrap up. Thank everyone for tuning in and wish everyone the best.